Level 1. $0. Oh, you don't notice it. That's the whole thing about zero. It doesn't announce itself. The paycheck hits on Friday. You look at the number and every dollar of it is yours. Nobody has a claim on it. No minimum due. No autopay waiting in the dark to pull its share out before you wake up. You buy groceries and the money just leaves and nothing follows it. No interest trailing behind the purchase like a shadow. The coffee costs what the coffee costs. Not the coffee plus 19% forever. The car makes a noise on a Wednesday. It costs $600 you didn't plan for and it stings. And then it's over. No new balance. No 30-year echo. The problem ends the day you pay it. You could quit the job you hate on a Tuesday. You won't. But you could. And the fact that you could sits quietly in your chest and changes how you stand in a room. A coworker 2 desks over is drowning. You can see it in the way he checks his phone when a payment clears, the way he laughs a beat too late. He earns more than you. He owes more than he earns. You watch him and you finally see the thing you have, the thing that has no name and no balance and no interest rate. A little money comes in unexpectedly. A tax refund, a birthday check, a bonus you didn't count on. It lands and it stays. It doesn't get swallowed by something you already spent a year ago. It's the rarest feeling at any level above this one. Money that arrives and belongs entirely to the person who received it. You have almost nothing saved. You feel behind. Everyone tells you that you're behind. What nobody tells you is that owing nothing is already a return, paid in a currency that doesn't show up on any statement. At zero, you don't feel rich. You feel free and you won't understand the difference until it's gone. Level 2. $5,000 in credit card debt. It started small. A car repair you couldn't cover. A month where the paycheck ran out before the days did. $5,000. It didn't feel like falling. It felt like a bridge, a thing you'd cross and forget. The statement arrives. Minimum payment, $40. That's manageable, you think. You pay it. You feel responsible. You don't see what $40 actually does. Most of it is interest. Almost none of it touches the $5,000. The balance sits there, barely breathing, going nowhere. You make the same payment the next month, and the next. A year passes, and you check the balance expecting relief, and it's $4,700. A year of payments moved it $300. The card is charging you 24% to stand still. Then, 1 month, the paycheck is late, and the payment isn't. A $35 late fee lands. The rate ticks up. The thing about this level is that being behind is expensive, and being expensive keeps you behind. An offer arrives in the mail. Transfer the balance, 0%, 12 months. It feels like a rescue. You read the fine print later, if at all. A transfer fee up front, and a rate at the end that snaps back higher than where you started. The escape hatch is another room in the same house. The minimum was never built to free you. It was built to keep you paying, forever, at the pace the bank chose. $5,000 at the minimum isn't a debt you pay off. It's a subscription to being in debt. Level 3. $30,000 in cards and a car loan. The card was the crack. The car was the flood. You needed something reliable, so you financed it. $36,000 out the door, tax and fees folded in. You drove it off the lot and it lost $4,000 of value before you reached the highway. Now you owe more on the car than the car is worth. The loan doesn't care that it's aging. The loan stays full while the thing it bought quietly rots in value in your driveway. The debt stops being a number and becomes a weather system. It decides things before you do. The dinner you skip. The trip you don't take. The job offer across the country you can't accept because the payments follow you no matter where you go. A friend invites you out and you say you're tired. You're not tired. You're doing math in your head at the table and you don't want anyone to see it. You apply for one more card to breathe, and the rate they offer is worse than the last one. Your score slipped. And a slipped score means the exact people who most need cheap money are quoted the most expensive money there is. The whole charges you extra for being in it. The phone rings from a number you don't know and you let it go to voicemail because you already know the voice. A payment is late. There's a version of this where the car gets taken in the night, and you've started parking it where you can see it from the window. $30,000 doesn't hurt like a wound. It hurts like weight. Always there. Never sharp. Slowly changing how far you can walk. At $30,000, the debt doesn't take your money. It takes your options. One quiet no at a time. Level 4. $120,000 in student loans. You signed for this at 18, in a chair, in an office, with a pen, before you'd ever paid a bill in your life. They told you it was an investment, They were half right. It bought the degree. It also bought a second invisible thing you didn't read the paperwork on. While you were in school, not paying, the interest wasn't sleeping. It was growing. It piled onto the balance and then started charging interest on itself. You graduated owing more than you ever borrowed. Before your first payment, the number is $120,000. You make the payments and they feel enormous, and the balance drops like a spoon against a mountain. One hard year you hit pause on the loans. Forbearance, they call it, and it feels like mercy. It isn't. The interest keeps stacking the whole time you're not paying, and you come back to a balance that grew while you were trying to survive. So you move to the plan that ties the payment to your income. It's lower. It's survivable. And it's so low it doesn't cover the interest, so the balance climbs even while you pay it every single month, on time, for years. You are current on a debt that keeps getting bigger. You do the version of the future where you'd be a homeowner by now, a parent by now, and you can see it clearly, and then you see the payment due date, and the future folds back up and goes in the drawer. You owed your 20s to a decision your 18-year-old self was never qualified to make. $120,000 in loans isn't a bill. It's a mortgage on a house you can't live in called your own future. Level 5, $400,000 mortgage. This is the good one. Everyone says so. The good debt. The one you're supposed to want. You get the keys and they're heavy in your hand, and for a moment it's everything they promised. Your walls, your door, your name on the deed. Then the first statement comes and you read it slowly and something cools in your stomach. $2,000 went out. Almost all of it was interest. A few hundred touched the actual house. You're renting the money and the bank owns the years. For the first decade, the math barely moves. You pay, and the balance sits there like a boulder because the front of a 30-year loan is built to feed the bank first and you later. Then the roof leaks and there's no landlord to call because the landlord is you now. The furnace, the taxes, the thing in the wall you didn't know a house could even have. The house doesn't just take the mortgage. It takes the weekends and the savings you were finally starting to build. You get a raise that year, a real one, and for a week it feels like the tide is turning. Then the property tax reassessment arrives and the insurance renews higher and the raise dissolves into the house before it ever reaches you. The house grows to eat whatever you feed it. You do own more each month. Just barely. A sliver. And the house is a real thing. A good thing. A place your kids will remember. But the door you unlocked came with 30 years attached, and the 30 years own your Saturdays as surely as you own the roof. Even the good debt isn't yours. For the first 10 years you don't own a house. You own the right to keep paying for one. Level 6. $1 million in leveraged debt. Something strange happens up here. The debt stops being a trap and turns into a tool. You didn't borrow this million because you were drowning. You borrowed it on purpose, against property that pays you rent, against a business that throws off more than the loan costs to hold. The interest, the thing that crushed you at 24% on a credit card, is now a line your accountant writes off. The debt works while you sleep, and at the end of the year it lowers your tax bill instead of raising your blood pressure. You don't even sell things to get cash anymore. You borrow against what you own, cheaply, and let the assets keep growing behind the loan. The broke version of you borrowed to replace money that was gone. This version borrows so the money never has to leave at all. A downturn comes, the kind that would have ended the version of you at 30,000. Up here it barely lands. You have room, reserves, a banker who calls to reassure you instead of to collect. The same storm that drowns one person is just weather to another, and the only difference is who had the cushion to wait it out. You owe more than everyone you know combined, and you sleep fine. The bank that charged the broke version of you a fortune to borrow 5,000 now offers you $1 million at a rate that barely registers because the same system that punishes need rewards leverage, and leverage is just debt held by someone who didn't have to take it. At $1 million in leverage, the debt isn't a weight anymore. It's an engine, and the only thing that changed was whether you borrowed to survive or borrowed to build. The loop. Somewhere right now, someone is staring at a $5,000 balance and a $40 minimum, doing the quiet math at a kitchen table, telling a friend they're just tired. They think the number is the problem. They don't know yet that the number was never the point. The rate was the point. The reason they had to borrow was the point. And somewhere else, someone owes $1 million against buildings they've never even visited, deducts the interest and turns off the light without a second thought. The debt didn't decide their lives. Why they borrowed did. One borrowed to keep the lights on. The other borrowed to buy the building the lights are in. Between them are all the versions in the middle. The one paying a minimum that never moves. the one parking the car where they can watch it, the one current on a student loan that grows anyway, the one whose raise vanished into a house. Every one of them was told the same thing, that the number was the problem, and every one of them found out the number was only ever the shadow of a rate they never got to choose. You can owe nothing and feel like you have nothing. You can owe everything and sleep like you own the world. The number on the statement was never the thing that mattered. It was never how much you owed. It was always whether the debt was standing on you or you were standing on it.